My name is Bassim Haider. I'm the founder and CEO of Channel VAS. Channel VAS is a company I started within the group about just over 6.5 years ago, mainly focusing on solving a problem we all know where people are running out of airtime credit in most emerging markets, mainly in Africa. And then it expanded to become a full data analytics business and then a fintech business providing airtime, data loans, cash loans, handset financing, and processing large amounts of data, which could be used for other services in the future. So I'm going to start very quickly by just providing a brief overview about our evolution as a business, just to give a quick view about the potential of fintech in Africa and in emerging markets generally. So if you look at this scale, when we really launched the business back in 2013, we had 50 million people interacting on our platform. Today, we have well over 650 million customers, meaning there's data on 650 million potentially underserved people, customers in emerging markets. This scale can continue climbing, and I hope in the next year or two, when I do another presentation, we'll probably have reached 1 billion customers by then. We have more than 40 million customers borrowing from us on a monthly basis, and we currently lend about $5 million daily. And this could be airtime credit, data loans, cash loans, and handset financing. Now, the business is, as I mentioned earlier, has transformed from just being an airtime business to a proper nano finance. And nano finance is a term we use because the loans that we give are sub $50. We try and focus on the segment that is underbanked and underserved, and that's where the potential is for our business, and that's our prime focus. We have no intention in looking at other aspects of this. We're currently present in 36 countries, so we've expanded the business to these 36 countries, though we operate fully in 31, and we're expanding our footprint. Just a quick chart I put here to kind of explain to you how the business started. Initially, it was airtime credits, and then we start to realize there are more opportunities, converting prepaid customers to postpaid customers using data. Then how could we utilize this data to actually provide cash loans, nano loans, and handset financing? But the main issue that you have, obviously, in markets is how do you collateralize, for example, handsets? If you give a handset to someone in a village, how do you get the handset to him? How are you sure you're going to get paid? Who takes the risk on the handset? So we had to find solutions, and we had to innovate, and we had to develop locking technologies that actually allow us to lock handsets remotely anywhere they are in the world, initially to allow these guys who either forgotten to pay or have no plans to pay to come back and actually make their payments, because now we collateralize the handsets. But it's a very vicious circle. And what is the real problem? So people cannot afford a smartphone as they are not financially included. But people cannot get financially included as they cannot afford a smartphone. So where do you start? This is what we call the catch-22 situation, is that do we start here or do we start there? But then if we start on looking at getting people, how can they afford smartphones, and they can't afford the smartphones, then we have to give them a loan to do it. And if we don't give them a loan, they cannot get financially included. So we had to solve this problem, and we're very proud to say that we've developed the technologies that allow us to push these handsets, smart handsets, into the market, allowing people to get onto the digital and financial systems. So if we look at banking the unbanked, this is really something banks, financial institutions have completely ignored. Why? Because there's no incentives. To acquire a customer that spends or earns $2,000 a year is not something the banks are interested in. We all know this. Neither is any financial institution, nor do they qualify from a risk perspective on how do I provide a loan of $50 to someone earning $2,000 a year or earning $1,000 a year. So we had to break that. We had to find ways to do this. And we've cut out the costs of acquiring these customers by simply using mobile technology and data that is available on either the mobile operators' platforms or banking platforms where they underserve customers. Now, with the over 1.7 billion people unbanked and underserved, I mean, this is the single biggest opportunity. When you think of Facebook over 1 billion customers, you compare to this where you have 1.7 billion potential clients to use, I think the opportunity speaks for itself. And we can reach these customers wherever they are, and we are reaching a wide base. So the fact that there is very low penetration of smartphones is actually the opportunity. A lot of people see this as a negative. We don't. We actually believe that the fact that these smartphones don't exist with these customers, the fact that they've never been on the banking and digital highways before, this creates the single biggest opportunity for Channel VAS, and this is where we're investing a lot of resources. So again, I come back to the vicious cycle I was actually talking about earlier. So by providing handset financing and be able to collateralize these handsets, we open up a wide array of services. We open up a new segment of lending that was very much ignored over the last 10, 20, 30 years. We now have a solution. We now have a way to deliver a $50 loan to a woman in Bangladesh that is trying to sew and some textiles and make a $20 profit. These are not very expensive loans. We know very well there's a limit between what we can charge and the default rate, so we're trying to always be responsible and a responsible lender here, but it does work, and the footprint speaks for itself, and our growth speaks for itself, and the opportunity. Now, when we deliver all of these services, obviously we face a lot of issues and challenges. This doesn't come easy. I mean, there's so many barriers to be able to get this services and these handsets and these cash loans to customers, and how do we get paid back, and so on and so forth. And one of the biggest problems is actually the lack of evolution of laws to reflect the new reality today. Starting even if you look at schools still teach jobs that no longer exist, whereby regulators have not transformed. So the telecom regulator is actually protecting a customer and the data. They tell the mobile operator, you cannot share this data with anyone. Then you have the reserve banks saying to the banks, you cannot share the data on the same customer to anyone. Then you have the insurance regulators saying exactly the same thing. You cannot share the data of the same client with anyone. But I have a question to ask. If every single regulator is protecting the data and the same data within his own sphere, what is the cost to the actual consumer? Are we depriving the consumer? Are we making sure that consumer never ever gets onto the highway simply because the regulator decides I'm going to protect your data? Protect it from who? I mean, if you share that data and you share it responsibly and the customer is able to give consent to a fintech company to actually use that data, then we can bring this person onto the digital highway. Taxation goes up, these guys get into the financial systems, their wealth improves, and so on. So there's still a lot of work that needs to be done here and breaking all these barriers. So what we've been talking to regulators about actually for quite a while is that let's use some of the microfinance institutions, for example, because we don't want to be regulated as a fintech business. So we use a microfinance institution and we say, okay, can we work with you? Can we empower you? Can we use your licenses, your light regulations to be actually reach these customers and provide loans to them? And it works. So we're doing a little bit by little bit, we're gaining foot. So we've launched in Nigeria, we're launching soon in Ghana and Uganda, and we are getting there. But it's still a very, very tough journey, but the potential is still massive. And I think one of the fundamental problems, it comes back to what I was talking earlier, is There is no, the regulators between themselves need to sit down and actually figure out how can we consolidate all this data from financial institutions, from insurance, from telcos, from aggregators, from payment services companies, and put it into a central database that actually allows the consumer to give consent to companies to actually use that data to provide them with services. Why is this not happening? This is a question we keep asking everyone, and no one seems to be able to give us an answer. And until this is done, we're not going to be able to put everyone on a digital superhighway. Next, I'd like to just speak about how we started and the challenges we started to face with time. Basically, our only way to target customers initially was through mobile operators. And we all know it's kind of a great avenue to reach these customers. But it's also extremely challenging because mobile operators demand more. As they lose digital services, revenues, they want more from successful services. So this is driving fintech companies to start to look for alternative ways to create revenues for themselves going forward. And if we look at, for example, companies that have actually popped out in the last 2-3 years in East Africa mainly, they started to bypass the mobile operator because they realize that they keep getting choked and choked and choked, and they don't make any money for themselves anymore, yet they put all the capex, they take all the risk, and so on. So there has to be a limit where they're pushed and find ways to work together between fintech companies and mobile operators, fintech companies and banks also. If we're going to be competing with each other, everyone will lose. No one is actually going to win at the end. So there has to be some sort of a fair formula between all parties. And what is driving people moving away from mobile operators in terms of fintech companies is partly ownership of data, but also I think the single most important thing is the data that you collect from mobile operators is 25% as rich as the data you collect from apps and behavior of customers when they have an app or a smartphone. And this chart that I'm showing you here illustrates just a little bit that with MNOs today, we actually, in our data platforms, we score customers based on 500 points per customer. So you can imagine the amount of data. These are behavioral patterns, these are recharge patterns, so on and so forth, 500 points. But if we look at data that comes from apps and smartphones, it is 4 times richer. And the question then companies need to say is, do we go the app route or do we go the mobile operator route, or do we go together? Do we work with mobile operators? Do we work with banks to actually push these services, use the knowledge we've gained from apps to be able to score customers better, include more people on the financial systems? When I speak to mobile operators, a lot of them still think that mobile money is the next big thing, that mobile money is, yeah, it is great, and it has worked brilliantly in some countries, but I think I can name the countries on one hand. The future, in my opinion, is no more going to be mobile money. It's going to be lending directly to consumers, because through an app. The app allows them to pay utilities. It's virtual. It's very simple to download. The KYC is volunteered automatically by the user. There is no long process to register your SIM, your mobile money, open an account with a bank you don't want to open an account with. The services are very limited of mobile money. Most outlets don't accept mobile money payments and so on, besides maybe 5-6 countries in the world. So is mobile money dying before it even takes off in many of these countries? I think in the next couple of years we will see this, but our belief is if mobile money hasn't taken off in key markets, it is very unlikely to take off. And I think mobile operators and fintech companies need to get together to figure out what is the next phase. Stop talking about mobile money. Let's talk about real things that we can deliver to consumers. And this is what I was earlier mentioning about, that virtual wallets is really the future, and especially with remittances in and out, being able to pay all your utilities, being able to borrow airtime, data, cash, etc., link it to all your banks simply from having it through an app. So what is mobile money then bringing to the table if there is a much better solution that can score you a lot better? So just to end, are financial institutions really evolving? I've met many of the banks over the last few years, and I see every single one of them trying to come up with their own initiatives. Every single one of them trying to say, well, we can do this, we can score customers, we can, we can start lending to our consumers. And I give it to them. They've tried, and most of them have actually not made it. They've been unsuccessful, and they've come back to companies like us to help them to reach these customers, score them a lot better, and so on. But that's not enough. There has to be more data. There has to be more data shared with companies that are responsible with that data. There has to be, regulators have to make a much bigger platform that allows not only companies like me, and I'm telling you, I'm pushing for even competition to get into this, because I believe the market is so big for just 1, 2, 5, 10, 20 players. But I think it has to be the norm that everyone gets onto this. And as we always know, I'll end by saying something quickly. We have a fantastic saying in Africa. And by the way, I'm born in Nigeria and very proud to be a Nigerian. And I always follow the saying, and I say, if you want to go fast, go alone. But actually, if you want to go far, let's do it together. I don't see why we can't do it together. Thank you very much.